Most people think that in new tax regime there are no tax saving options, but that's not true. There are several smart and practical ways to reduce the tax. In this video, I'll explain 6 simple strategies to reduce your tax. Let's start. The number one strategy is Employer NPS contribution under Section 80 CCD 2. Your employer can contribute up to 14% of basic salary plus DA to NPS, which is completely tax free. For example, if your basic salary plus DA is 20 lakh, the employer can contribute up to 2 lakh 80,000, which is completely tax free. The only thing you have to do is you have to request the HR department to restructure your CTC to include NPS contribution. The second strategy is employer PF contribution. Most of the companies contribute 1,800 rupees to PF, which is 12% on minimum wage ceiling of rupees 15,000. You can request your employer to contribute 12% on your actual basic salary plus DA to PF. Then your employer will shift some of your taxable allowances from gross salary to employer PF contribution, which is completely tax free. Yes, of course, there will be a reduction in your take home salary, but there are two advantages. Your TDS will be reduced drastically and you will have a huge retirement benefit available. Strategy number 3. Many people think that home loan interest benefit is no more available, but that's not true. If your property is self-occupied, home loan interest benefit is no more available. But if your property is rented or let out, you can claim home loan interest deduction under new tax regime. And the important point is you can claim the full interest amount without any limit of rupees 2 lakhs. And another important part you need to consider is this cannot be set off against the salary income, but you can reduce it from your rental income. By the way, please don't forget to subscribe this channel and watch till the end, as I'll be sharing important tax saving strategies. Strategy number 4 is tax gain harvesting and tax loss harvesting. Under the current capital gain tax rules, up to 1.25 lakhs of long-term capital gain is exempt from tax. So the smart investors sell their investments and book a profit up to 1.25 lakh and buy this investment again on the next day. This is called tax gain harvesting. If you already made profits from sale of shares or mutual funds in a financial year and you have investments with a loss, you can sell those investments in the same financial year and set off those losses against the profits you made earlier. This strategy is known as tax loss harvesting. And the strategy number 5 is for professionals. If you are a professional like a CA, doctor, lawyer, IT professional or architect, etc., and if you're moving from a salaried role to a consultant role, you can save a significant amount of tax. Let me explain it. For example, if your salary is 30 lakhs, your only deduction allowed for a salaried employee is 75,000 of standard deduction. So your taxable income is 29 lakh 25,000. Whereas if you move to a consultant role and file under Section 44 ADA and under the New Income Tax Act under 58(2), you can claim expenses and make a profit and claim a profit of up to 50% or more. That means your taxable income will be 15 lakhs or more, which is a significant saving compared to the salaried income where it was 29 lakh 25,000, whereas under Section 44 ADA or under Section 58 it will be 15 lakhs. So there is a significant amount of tax savings here. But you can claim only this benefit if your professional income in a year is up to 75 lakhs. And two more benefits available under this scheme is you don't require to maintain any books of accounts and no audit is required. However, you may please cross-check your gratuity benefits and leave encashment benefits that you may have to forego while moving to a consultant role. Strategy number 6 is for small business owners. This simple taxation method is not used by many business owners. Under Section 44 AD or as per the new Income Tax Act 58(1), small business owners can use presumptive taxation method. Under the scheme, you are only eligible if your turnover is up to 2 crores and if your transactions are more of digital up to 3 crores. And the benefit is you can declare your profit as 8% or more in case of cash transactions and 6% or more in case of digital transactions. And you don't require to maintain books of accounts and no audit required. These are the 6 important tax saving strategies you can claim even in new tax regime. Please don't forget to subscribe and share it with your friends. And if you have any queries, please comment it below. Thank you.